Hello, and welcome to ESSSuper's quarterly investment update. Share markets have continued their strong start to 2017 with both Australian and international shares recording gains during March. In Australia, investors were buoyed by Australian companies having their strongest earnings reporting season since 2010. Bond markets traded flat over the month as investors seemed unfazed by noise around US and UK politics. Interestingly, we saw little reaction from financial markets as the UK formally elected to leave the European Union. The US Federal Reserve was in focus as it hiked interest rates by 0.25% to a range of 0.75 to 1%, the second time it has done so in 3 months. This move by the US Central Bank reflects steady economic growth, low unemployment and confidence that inflation will rise back up to the central bank's target level. Unsurprisingly, the US share market has traded higher on the improvement in sentiment. On the political front, investors continue to watch with interest the progress of US President Donald Trump and his fiscal plans to reflate the US economy. Donald Trump's failure to repeal Obamacare and the distinct lack of detail around tax reform has markets slightly worried about how effective his administration will ultimately be. Back home, the strength of the Australian housing market continues to grab headlines. According to the Australian Bureau of Statistics, house prices in Melbourne and Sydney increased by 10.8% and 10.3% respectively over the 2016 calendar year. New measures have subsequently been announced by the banking regulator APRA, with further limits now in place for interest-only mortgages. Although the ESSSuper investment options do not invest directly into residential housing, our portfolios are indirectly linked due to the sensitivity of the broader Australian real economy to house prices, and also directly through our exposure to the Australian banks. As mentioned earlier, we've seen a strong start to 2017, with investment performance being driven predominantly by strength in share markets. As you can see, investment options with relatively high allocations to shares have provided stronger performance over the past 12 months. Our lower risk investment options have performed as expected, delivering lower returns in a more stable manner. Investment performance over the past 5 years has not been too dissimilar, as investment options with higher allocations to shares have all delivered strong performance. Pleasingly, we have also seen our investment options benefit from being well diversified across investments such as bonds, property and infrastructure, especially when share markets have been more volatile. We remain focused on diversification to ensure our members are not overly exposed to any one market or country. It's important to remember that superannuation investing is primarily designed with a long-term time horizon, and switching between investment options based on short-term returns can materially impact the performance of your superannuation balance over the long term. ESSSuper will continue to manage the fund's investments to deliver optimal retirement outcomes for our members, and we look forward to presenting to you all again soon.